Your mind is most powerful when you are at peace. It is very important in the stock market that you take decisions with your intellect and not with your emotions. Here I am to discuss in this video how you should remain calm and peaceful during a stock market crash and take the best of the decisions for your investments. So if you're new to the channel, please do subscribe and hit the bell icon to get all the notifications of the new videos. And don't forget to join our Telegram channel where we discuss daily market views, news and lot of other interesting stuff. So let's get started. Let me start with a quote. A great trader once noted that there are only two emotions in the market, hope and fear. The only problem is we hope when we should fear and we fear when we should hope. So when there are extreme conditions in the market, that there's a market crash where there is pessimism all around, it's important for us to remain hopeful and continue our investments wisely. And in situations where the market is of extreme greed and people expect the market to go even further up, it's important that you become fearful or you become cautious and you start booking partial profits. So that's what this quote is all about, and let's get started. So, to remain calm during a market crash, these are the few things you can do. Be a little conservative while deploying your capital. So, don't try to finish the entire cash as and when you're investing. You can be an aggressive investor when it comes to picking stocks. So, pick up companies which are aggressively doing business, the smaller sized companies, that's fair enough. But while you make investments, you value a company and you decide that at this particular price the valuation is reasonable, don't jump all in. Invest in small parts, invest, watch the stock movement, watch the quarterly performance of the company and gradually increase your position size in that particular stock in your portfolio. So if you be aggressive in stock picking but a little conservative in deploying your capital, then you will be more emotionally stable due to the price fluctuations in the market. The next thing could be that you can stay on cash. When I say stay on cash, it doesn't mean that you sell your entire portfolio and be on cash. It means that you can have a small portion of cash as per your comfort. If you feel that the market is overheated and there could be a correction, or when the market has already started falling, or during a market crash, you can sell a part of your portfolio and stay on cash, maybe at about 10, 20, 30%, so that you are quite calm and composed that even if the stock market goes down, you are prepared to use that cash to average the other stocks. Now, how you should generate cash? You should generate cash by selling the weakest stocks in your portfolio, the companies which are coming out with bad results and which you hope that those stocks will not go up so easily. Never sell the strongest stocks in your portfolio which are delivering good returns and the companies which are performing well. It may appear in green and that will attract you to book profits, but it's always better to sell your losers and not your winners. So this way you can generate cash, and with a partial amount of cash in your portfolio, you will be more composed and calm during a stock market crash. The next thing what you can do is avoid watching the screen continuously. You should decide to buy something at a particular price when the market is normal itself. Based on your research, you pick companies, decide the valuation, at what rate you want to buy. Personally, during the day when the market is falling, I don't buy new stocks. I have my list of stocks which I have already decided, and I've also decided the rate at which I want to buy. And if those come to that level, I am more than happy to invest at those prices. Other than that, if there is some major variation in any of the other stocks which I have already researched on, then I may consider buying it. But most of the cases, I never buy new things by taking instant decisions on the day of the market crash. I have a predetermined set of stocks which I want to buy, and I also have the rates at which I want to buy. So whenever they come to that price, I buy them, and I don't take decisions in haste. Even after a buy during a crash, the stock may further fall down because during the stock market crash, generally the technical levels don't hold much. So even if it goes down, I'm not worried because I'm happy to buy that particular company at the particular price I wanted to buy. So that's what you can do. And if you are prepared to do that, there is no need to watch the screen continuously. Nowadays, there are a lot of brokers which provide the GTD order facility. So you can fix up a GTD order and you can avoid watching the screen on a continuous basis to avoid unnecessarily disturbance of your mind. The next thing what you should do is avoid the noise around you. Don't speak to people on unnecessarily gossips and other topics which distract your mind. Avoid watching too much of news, reading too much of newspapers, to avoid negative things which disturb your mind, which can have an impact on your investment decisions. The next thing what every investor should have is you should have a rule book. You should set out of your experience, out of the learnings, whatever you have during your stock market journey, you should make a rule book where you should mention that these are the rules I will follow when I buy a stock. These are the rules I will follow when I sell a stock. So when some that kind of a scenario comes, when your buy rules are followed, you will immediately buy the stock. If the sell rules are followed, you will immediately sell the stock. Even for an investor, it is always important to have a stop loss. So the stop loss need not be a price loss, but whenever you feel that your thesis of investment is broken, you should come out of that stock. Even if the thesis is intact, you should keep watching whether the stock is breaking the major levels. If there is a major breakdown on the charts also, then you should immediately try to find out what is the reason for the fall. If you are unable to find out the reason also, and you're not sure whether your thesis is still intact, then you should consider coming out of that stock, because a major technical breakdown happens only with a particular reason, and you may come to know the reason later. The chart shows the signs first. So having such kind of rules of buying and selling will protect your portfolio, and you will be at peace whenever there is a stock market crash. The next thing what you should do is you should stick to your strategy. So in just having a rule book or having a strategy is not enough. You should ensure that you're sticking to your own strategy, and even if something is falling more than what you wanted to buy, you should not change your mind and buy that other stock. So you should stick to your strategy of buying and selling even during a market crash. The next thing what you can do is to reduce your position size. So it's not required that you remain fully invested. It's not required that you invest a certain amount of your total capital, like 10, 20, 30% in a particular stock. Wherever you feel that the size of the company is not up to your comfort and you have deployed more than the required capital, more than your comfort, you should reduce the position size. So when the position size reduces, you will not be much worried about that particular stock even if it falls. So by reducing the position sizes also, you can be at peace. You should always remember the markets eventually go up. Like gravity, everything comes down, then markets also eventually move up. I am saying that the markets eventually move up. I'm not saying that all the stocks in the market will move up. So there's a thin line of difference you should understand. The fundamentally weak stocks, the penny stocks, are sometimes when they fall during a market crash, it's not necessary that those stocks go up eventually. So it's important for you to stay with the quality stocks. But do remember that markets which eventually go up, and if you are invested in quality stocks, you will come out safe sooner or later. This thought itself will give you peace of mind. The next thing, as we have discussed, is avoid low quality stocks. Even if you have bought them during a bull market by chance or by tips or by any reason, whenever you find weakness in the market, the first thing which you should do is come out of the stocks where you don't have enough confidence over the fundamentals or over the management quality or any other reason. So whenever you feel that the quality of the stock in your portfolio is low and the markets look bearish, the first thing you should do is exit those stocks, whether in profit or loss, and stay on cash. This cash will be useful to you to buy good quality stocks during a market crash. So this will be like a blessing in disguise for you. By selling the low quality stocks, you can shift to better quality ones during a market crash. It's important for you to have an asset allocation policy. Don't deploy the entire amount of your savings into the stock market directly. Divide the savings into various asset classes like a provident fund, insurance policies, bank fixed deposits or debt funds, real estate, and these kind of gold or any other asset class wherever you have comfort. It's not necessary to cover all the asset classes, but it is as advisable to split your investments into minimum 2 to 3 asset classes. So when you have such a division of capital into different asset classes, even when something goes wrong with one asset class, temporarily you will not have much disturbance of your mind, because the rest part of your investments in other asset classes are safe. So as per your age, as per your life goals, divide your money into different asset classes so that you can be peaceful during a market crash. So this kind of situation of extreme greed arises before a market crash. So whenever there is an extreme greed in a bull market, at that time itself, if you try to be a little more cautious, you try to be less greedy compared to the others, you will automatically start booking partial profits and you will be on cash. So that could be a strategy where you can have some cash during the extreme greed situation so that during a crash you will not be much disturbed. The next thing you should remember is you should use your mind to take decisions and not your emotions, because you will be emotionally disturbed sometimes during a market crash, and out of the emotional disturbance you should not sell out something which deserves a position in your portfolio. So use your mind to take decisions and don't get emotionally attached or detached to any company in your portfolio. So these are things you should follow to be emotionally stable and calm, composed during a market crash so that you can take right decisions for investing and make your portfolio better during and after a market crash. So let's conclude by discussing another quote by Mr. Warren Buffett, who we all admire. He says success in investing doesn't correlate with IQ. Once you have ordinary intelligence, what you need is temperament to control the urges that get other people in trouble investing. So it's not important for you to be the most intelligent or the smartest investor, but more than that, you need a control over your emotions so that you are able to control that urge of buying and selling in haste. When others do the same mistake, you will be at an advantage to get those things where others are selling in fear at attractive prices. So keep these things in mind, and I wish the best for your portfolio during this crash and coming in the coming volatile times as well. So I hope you like this video. If you like it, hit the like button and subscribe to the channel. And if you want more such videos, please leave your suggestions in the comments below. I would be more than happy to make videos as per your suggestions. Thank you for watching and have a wonderful, wonderful day.